Yeah, certainly one thing that seems to be helping that Australian dollar above 105 is that bounce back in gold and also iron ore. There's quite a bit of optimism about the outlook for China, helping to actually push these iron ore prices higher still overnight, much to everyone's amazement, I think, at this stage anyway.
Look, it's reached a fresh 15-month high, $158 a tonne. No one thought it was going to get this high. We heard CommBank yesterday suggesting it wasn't going to be able to sustain $150. Let's bring in Peter Maguire from NG Farrer. What is going on with this iron ore price? It seems unstoppable, despite the doubters.
Good morning, James, and good morning, Brooke. I mean, there are a couple of key issues that we need to be aware of. First off, we've had unseasonably cold weather in China. We had the restocking of inventories. As we know, we ran them right down in September when iron ore prices were in the 80s. So that's one good sign there. You've seen increased activity as far as the Chinese steel producers. So there's a little bit upside there. And, of course, we've got a few little supply issues as far as weather, not only in China but also out our way in Brazil. So you're worried this time of year as far as tornadoes and so on, as far as shipping. So seaborne trade is certainly on the increase due to cold weather in China, and that's really underpinned prices ahead of the Lunar New Year.
So are all of those factors sustainable, or do some of those give, and therefore, can we actually see it remain around these levels above 150? Because consensus is quite a bit lower than that.
Yeah, absolutely. I think 125 to 145, Brooke, would be more or less the trading range.
And what factors? Why back to there?
Remembering that, first off, that Chinese New Year, as far as the lunar, they're all restocking ahead of that. So we're going to see a downturn as far as activity in China probably in the next 3 to 4 weeks. It happens every year, as we realise that at the end of January, February. And the next side of it, of course, is the weather seems to... we've had really unseasonably cold weather, and that will surely, subside going into, the latter part of this month.
Where does it settle then? I mean, you listen to a lot of the big iron ore miners, and they're suggesting anywhere between 120, 130. You even had, last week we were speaking to Atlas Iron, they even suggested maybe even up around 140, but certainly no one's suggesting 150. So where do you see it settling?
I think 125 to 145, James. I wouldn't be surprised to take 161, 162 out sometime this week. Look, it's hard to forecast much higher than that, but boy, oh boy, it's really hit everyone for a 6
Do we start to see broker upgrades of some of these iron ore miners, particularly after what we saw when we hit around 86, 87, 90 US dollars a ton?
I think you've got to, but remembering a lot of them have had wonderful uprides, as far as Price, Rio, BHP. BHP mid-year, or mid-last year, I should say, was, the best part of 30, 50, I think, or 31 bucks. Currently trading at the 37.5. So Fortescue, they've all had really strong upticks, and it's playing off the back of iron ore prices.
You just wonder. I mean, someone posed a question to me just as when we were at 80 US dollars a tonne. Everyone said, "Well, it's going to go much lower than here. We can't. This is dreadful." You kind of get then everyone jump on the bandwagon. Even at 150, maybe it can continue higher from here.
Well, it may do, Brooke.
It might be the same. I'm just thinking it might be the same people at 80 said, no, it's definitely going to 50, 60, as the people, sitting here at 150 saying, oh, it has to go back to 110, 120.
Yeah, well, another side of it, of course, is that India, it's been fortuitous as far as, our miners in Brazil, that India is the third largest producer, and as far as they've got issues there internally, as far as shipping. So, that's closing down that whole side of it as well, which is underpinning great results for our miners and, of course, Vale.
What about the performance we've seen? I mean, you made mention of BHP's strong rise since about mid-time last year. We saw some increases, particularly early on, back end of last year with a lot of the iron ore miners. But despite this increasing iron ore price, we've started to see these stocks start to fall. We're seeing it again despite an early positive start this morning. You've got Fortescue down at just around about 1%. Similar story for Atlas. Rio flat now, BHP weaker. Is that the market saying we don't believe in this iron ore price?
No.
Or is it people taking profit?
I think it's people taking profit. And in technical trading, James, it comes down to one word, and it's called exhaustion. And there's probably a little bit of exhaustion that happened. We had a wonderful run-up, really, from the end of November all through December. And the market's possibly just a little exhausted. We'll see a correction to the downside, maybe another 1% or 2, but I think then it'll start to rally again to the upside.
So do you see any of those dips being supported? Do you see them coming in, some buying coming
I think so. I think BHP at 36.5 would certainly be wonderful buying. So, and Fortescue also, if they're holding these sort of dollar ranges, 125 to 145 price for iron ore, it's going to be great for their balance sheet, and they'll pay down a hell of a lot of debt. So that'll be certainly, I think 13 should be a fairly strong year.
Peter, just one on a separate issue, but staying in the resource space, a follow-up from our discussions of the past couple of weeks. We talked a little bit about Iran and Israel and the US in terms of how that might affect the oil market in the coming year. Just since we last spoke, though, there have been some interesting figures coming out from Iran showing how hard the sanctions are actually biting. They've actually seen oil revenues plummeting 40%.
Yeah.
Oil and gas products export revenues falling 45%. Iran's still kind of denying it and saying, well, it's very hard to confirm this kind of thing. What are the kind of implications we're talking about with such a big hit to revenues?
Look, they came into play on 30 June, and it's very evident, Brooke, and it'll only continue to bite as long as these sanctions take place. So we'll be talking mid-year, and they'll be down 60 or 65%. So it really cripples a nation, and that's how you get some sort of change of attitude internally. So,
is there any evidence of that at the moment, though?
I think the next part of the journey is, are you going to see strikes on Iran from Israel, and will that be followed up naturally by the US? So, that's what the general consensus is. Spring to summer this year in the Northern Hemisphere is going to be a very, very interesting time for that whole region.
Impact to oil prices, is any spike going to be attributed more to the geopolitical tensions as opposed to any potential supply shortfall from Iran? Because, yes, they're part of OPEC, but they're not a huge contributor.
They're not a huge.
Saudi can just ramp it up a little bit. Exactly
right. So, no, I don't think... I agree with you, James, and I think the geopolitical will certainly add the best part of 10 to 15% in the short term, because remembering that a lot of it travels through the Strait of Hormuz, so that really is as far as a supply constraint, that could really dampen things, and I'm sure that they'll flag the vessels with US flags, so the battleships will support that whole initiative.
Pete Maguire, thanks for coming in today.
Thank you, Brooke.
Good to chat to you.
Thanks, Pete.
Cheers, James.
We continue on with this resource theme, though, because, of course, we've got some data out of China.